I'll send it to the WhatsApp group. Don't worry. No problem.
Continue. Don't listen to that.
No problem. I will send it to you.
Continue with what you are doing, sir.
No problem.
Continue,
I will send
sir.
it to
Please.
Don't
I'll
bother
send it
sending.
to you.
Just continue, please. Please continue.
Oh, it's very important to continue.
If
No,
anybody
don't worry.
wants
I
to
will
do
send it.
Please
anything,
continue with what you are doing, sir.
But I beg.
Don't send it.
Continue, sir.
Hey, Muna, keep quiet, I beg.
So, talking about impact of IT. Hello, can you hear me?
Yes, sir.
Yes, I can hear you.
All right. Tell you about the economy, tax, avoidance. This one has, because of the way it is, ICAN likes this topic in the last syllabus. I don't know if they will still maintain the way they like it. So I will say moderate. Moderate chances. Tax planning, avoidance, and evasion. Tax audit and investigation. These two, right? These two topics they've been in the syllabus for a while, but they've always brought it. They like bringing it out at skills level. Whether or not it's going to come here, I don't know, but let me just give it also say a moderate chance. Moderate to low chance. All right, but there are some topics that I will beg you to pay attention to, and that's basis period, accessible profit, capital allowance, and loss relief. These three topics, right, they will not be tested. They will not be tested. But you can't attempt number one without knowing those three topics. Does it make sense to you? Number one.
Yes, sir.
Formed basis for number one. Then you have your 8. I would say is your company income tax. Company income tax, and then taxation of pioneer companies. These two, so from year to year like this, has a likelihood of coming out to your number one. That's your number one. For one question. All of this, right? Then if I want to move on a little bit, there's this topic, taxation of oil and gas. This is your number 2 to 4. That's you find it either number 2, 3, or 4. And mining, taxation of mining and extractive industries. You always find this between your 5 to 7. Meaning that this one has a very high likelihood of occurrence. These 3. So this one has a very high likelihood of occurrence in your exam, right? The list is that they just introduced. Are you with me?
Yes, sir.
Taxation of list arrangement. This is an introduction to the syllabus. My worry with this list is that when I can't bring new thing into the syllabus, there are always two approaches to it. Is that they remain silent until people become shocked, or they test it immediately. So I would say maybe you should pay attention to it. Right? Then double taxation arrangement. Then taxation of non-resident companies. Taxation of non-resident companies. And then tax treaties. These three of them look alike, right? These three topics, they look much like each other. So it will be something you want to check out and quickly check for the sake of the number 3, 4, 5, right? Number 3 to 5, because ICAN is also number 3 or 4, basically. Then international taxation, base erosion and profit shifting. Transfer pricing. Merger and acquisition. These are theories that I can like texting, right? These ones, I can like testing them, but you can't see the 4 of them at once. That's the issue with that. You can't see 4 of them at once. Taxation of investment income. I do not see any serious thing from this topic, although it's a little bit more pronounced, but I still do not see anything. But I feel it will aid your answer of number 1. Aid your answer to number 1 question. Are you still following me, please?
Yes, sir.
Yes, sir.
Yeah,
Yes,
I
sir.
feel
Yes, sir.
I feel it will aid your answer to number 1. Capital gain tax is a constant topic. I can like it. So you want something you want to pay attention to. All right, so that is that about that. But if you're able to know all of these things I've just said, I believe very strongly that you have won ICAN 10-0 this way. If you know all of these topics, right? But again, just there's an arrangement around how to permutate your ways around all of this, and then you find a way around it. Then there's another topic too, tax accounting and reporting, and that speaks to your IAS 12 basically. Although there are some modalities to it, but it's still speaking to your IAS 12. And this speaks to, have I said this? This speaks to IFRS 16. Basically, so that is that. Any question? Any question, please? Yeah, Chidima.
Can you drop this on the group? I don't know.
No,
Oh, you
it's
can.
just
Okay.
for. It's just, if I'm going to drop it on the group, it's just the list. I'm not going to change all this. My permutation is for class consumption.
Okay. I wasn't jotting down. Okay. Thank you.
All right. So these are things you want to note. You know, exam, you have to be fast about it and know your way around all these things. But if you know all these topics that I just listed out, I believe very strongly that you've won already. You've won the battle. Do you understand? So that is that about that. Any other question before we go to the major business of the day? Hello. Hello.
Hello, sir.
Yes, sir, we can hear you.
Hello,
All
we are
right. So
hearing you.
okay.
I
So
can
let's
hear
move
you,
in.
sir.
Let's move into the business of the day. Let me just quickly pick one and then discuss with you. The class is supposed to end by 10. Ideally, our class should end by 11, but because we are just starting today, we are going to end by 10. I hope that's fine. Or you want it a little bit more extended?
10 is fine, sir.
Yeah.
No, sir.
10 is okay.
11 is fine, Abby.
10 is okay. 10
10
is fine,
is
sir.
10 is fine.
12 is fine.
Preparing for
12.
tomorrow. One.
So let's look at tax evasion and tax avoidance. So can anybody tell me the difference between tax evasion, or what is tax evasion and what's tax avoidance? Yeah. So Olasumbo.
Okay, sir. Tax evasion is an illegal way of running away from tax, not paying tax, and it's illegal. It's like a criminal act. While tax avoidance is looking into the
Yep.
loopholes in tax laws to avoid payment of tax, and it is legal. It is not a criminal act.
Okay. Good. Esther.
So she already said it. Tax evasion is just like you're supposed to pay the tax, then you're running away from it. You don't pay it.
Yeah.
Meanwhile, tax avoidance is trying to look for a way around not paying tax, which is legal, but evasion is illegal.
Okay. Makes sense. Makes sense. So again, let's just okay.
I wanted to add that it's just a way of looking at the loopholes in our laws to avoid paying taxes.
Okay, that's correct. That's correct. So just on a lighter note now, if you say somebody has E in exam, that person is near failure. You know, if you have E in a 4-unit course, you'll be crying. But you have A in a 4-unit course, you'll be happy. So E is failure, that's fraudulent, while A is an excellent way of doing things. All right. So that's E there is the tax evasion, and A is the tax avoidance. So tax evasion is just coming up with untrue claims or a fraudulent way of taking advantage of tax loopholes to ensure that you pay little tax, right? And it is either you do that by understating your income, overstating your expenditure, making false claims for allowance and reliefs, and then omission of chargeable income from tax returns. While tax avoidance, in reality, is trying to take advantage of tax loopholes to make sure that you pay least possible tax. An example of tax avoidance scheme is if I just understand Nigerian tax system and I decide to deliberately move into pioneer status to operate in a company that has pioneer status incentive just to reduce my tax, then what you say I've done is tax avoidance, right? Tax avoidance. Trying to take advantage of tax loopholes to minimize tax. So now tax avoidance is legal, evasion is illegal. Tax avoidance is understanding tax laws and taking advantage of it. while tax evasion is a fraudulent activity. Tax avoidance will result in paying minimum tax without breaking the law. Tax evasion will result in paying incorrect tax or minimum tax through the courts. Tax evasion is not supported by courts. Tax avoidance is criminal, and not criminal. Tax evasion is criminal, and the reward for criminal activity is either fine or imprisonment or penalty. Right? Tax avoidance will be disregarded, right, by the revenue service by applying anti-avoidance legislations, while tax evasion is usually frowned at. Tax avoidance does not attract investigation, while tax evasion will always attract investigation. Right. Do you have any questions so far? Do we have any questions so far? Do you have any question?
No,
No
sir.
question, sir.
Make progress, sir. All right, so let's look at anti-avoidance legislation. Anti-avoidance legislation is actually a kind of reaction of the tax authority to block tax loopholes, to ensure that people don't take advantage of tax loopholes to reduce tax. So anti-avoidance legislations are those kind of legislations or enactments that are geared towards ensuring that the loopholes are not too many for taxpayers to take advantage of, right? We have two types of anti-avoidance legislation. The first is specific anti-avoidance legislation, and that is specific legislation to block a known tax avoidance device. So, for instance, it is not a general law, it is just geared towards a particular industry or trying to clarify the ambiguity in a particular law or code to ensure that people do not take advantage of the tax loophole. What is the advantage there? Its provision make the law imposing tax on a particular transaction clear, because most of the time it is the ambiguity in the law that makes people take advantage of that particular loophole. Number two is that ineffective or inadequate legislation can be amended through specific anti-avoidance legislation. But the disadvantage is that tax laws are complex, right? But in creating an anti-avoidance legislation, you can end up making an existing complex tax law a little bit more comprehensive, and that will not make simplicity achievable, right? Number three is that taxpayer would seek further loopholes and again exploit such loopholes, which may create an unending need for future legislation. So when there's an existing law that people take advantage of, once the law is blocked, once the loophole is blocked, people try as much as possible to take advantage of another existing law. So let's look at general anti-avoidance legislation. So in this case, it is not an amendment of law, but the relevant tax authority has the power to disregard all transactions entered into that could be proved to have been entered into for the purpose of tax avoidance purposes. So what general anti-avoidance legislation is looking at is that we do not need to amend an existing tax law. All we need to do, right, is that when the intention of the taxpayer, right, is to avoid tax, and that's the reason why he entered into the transaction in the first place, we can as well disregard all the transaction entered into with the purpose of avoiding taxes. What are the advantages? Number one is the number of anti-avoidance legislation is reduced, consequently minimizing the complexity of the tax law. Number two is provisions exist in the legislation to disregard all future tax avoidance, that is, schemes that are considered to have violated the spirit of the tax laws. But the problem with this kind of arrangement is that the law has vested power on the tax authority, so provisions are typically very general, it lacks precision, and it is usually very vague. Very, very vague. Are we still together?
Yes, sir.
Then number two is that
Yes, sir.
there is reliance on the tax officials, and you know, human factor will always come to play once you are relying on tax officials, right? Especially in a very bureaucratic system, and then that means that you may want to rely on the judgment of the tax official in this instance, and the tax official can also exceed the intention of the legislation or fails to carry it out in full in some other details. Now, but again, are we together, please?
Please, we need
Yes.
Yes, we are with you.
All right, so let's
Yes,
look
sir.
at what are the reasons for tax avoidance and tax evasion in Nigeria. You know, when you were doing something around fraud, you know, it is not, sometimes it is not because there is fraud. Fraud is not usually a case of how do I put it now? The fraud triangle, the reasons why people commit fraud. Most of the time, people commit fraud because there's an opportunity to commit fraud. Right? So the same way, we want to check what is the reason behind tax avoidance and tax evasion. Right? Number one is that equity. A tax system must not only be seen to be fair and equal, then the principle of equity and fairness must be entrenched. But again, in Nigeria, you would find out that your tax system is not a little bit more, is not equitable, right? And if a tax system is not equitable, the people will want to try as much as possible to devise a scheme for finding or for getting equity by themselves. And that may result in tax evasion or tax avoidance. For instance, you would ask, if you ask an average person why they commit, why they do evasion, they will tell you they don't have any benefit from the government, or they will tell you that they are paying more tax and they are earning less. Especially in a place where you have a proportional tax system, the poor are likely going to be paying or suffer more burden, or suffer more burden than the rich, right? And because it may become overwhelming for the poor compared to the rich. So a tax system must be seen to be fair, although the Tax Reform Act has addressed a lot of non-equitable issues, right? The second one you have is allowances and reliefs. The issue is that most of the reliefs and allowances that are available in tax law are far from being reasonable. For instance, there's this popular one, although it was later scrapped in 2023, but it was very popular. But I cannot remember I've not seen anybody who enjoyed that allowance before in my life. Although I'm still young, I never see anybody that enjoyed that allowance before. It is this rural investment allowance. I are saying that for anybody to enjoy rural investment allowance, the facility they are providing must be 20 kilometers away from where it was originally provided for by the government. So if you want to provide third roads, you must start 20-kilometer road for it to be able to enjoy allowance. And you begin to wonder, are you the second government for you to be able to start? So those allowances and reliefs are very much unrealistic. Yeah, Chiamaka, go ahead. Your hand is up. Chiamaka,
Sorry
your
to
hand is
drop.
up.
Can you hear me?
Yeah, please go ahead.
Yeah. So please, can you explain when you're done? Can you, with this one, can you explain that number one again? The equity. Sorry.
So I was saying that the tax law must be fair to everybody, right? Both the rich and the poor must be fair to everybody. And it must be with the intention of getting the best out of the citizens. Unfortunately, the poor people have always or have noticed that the tax is more burdensome on them compared to the rich, because most of the time it is proportional, and it may become very burdensome on the poor compared to on a particular set of people compared to another set of people. So for that reason, the poor people or people who are disadvantaged by the tax law may devise their own scheme of ensuring that they pay the least tax possible. Does it make sense? Chamaka, I
Thank you.
didn't hear
Yes.
you.
Hello, can you hear me now? I said yes, sir.
Yeah,
Thank you.
you're welcome. So that is that. Do you understand allowances and reliefs now? That some of those allowances are far from
Hello.
reasonable. Yeah. So allowances and reliefs, right? I was saying that those allowances are far from reasonable, very, very far from reasonable. And because it is very, very far from reasonable, people want to devise their own ways of achieving that. Number 3 is the tax authority. The tax officials are not well equipped, motivated to fight evasion and avoidance. For instance, do you have anybody working with tax authority on this call? Hello?
We are here. We are with you.
Yeah, I
FIR.
asked that. Do you have anybody working with tax authority on this call?
I don't think so.
Okay, no problem. I know you may be here and
Just
just be willing. You may be here and you want me to say what I want to say, but I will not say it all the same. So the tax authority, the tax officials are very motivated. They are equipped to fight tax evasion and tax avoidance. They are waiting for me to say what I'm not supposed to say. So they are very well motivated. Yes, sir. They are very well motivated. They know computer very well. They can they use the
Mr.
system is
Obudien, if you don't
automated.
talk that thing, eh?
So one time now I'll carry fire. I want to work in FIRS or so NRS now. They will not say, we say we are not motivated. I didn't tell you we are all motivated together. Do you understand? We are all motivated. We know how to use computer. The learning system is very good, although we can improve, but then don't worry, when I join, we will improve better. You understand what I'm talking about? That's that about tax authority. Another issue is multiple tax. I was in a class today and I was telling them about multiple taxes. And you remember how burdensome tax system is? if you ask me, what's the difference between land use charge and tenement rates? I do not tend to see any difference. Why should a company have to pay up to 15 to 16 different taxes at state level, local government level, and federal government level? I will pay CIT, NATDA levy, police, NSITF, ITF. I'll pay everything. So, and you don't want me to lie. We are already taking up to 40% of my total profit, of my chargeable profit. What would I now give to shareholders at the end of the day? So those taxes discourage people from being honest, right? So everybody's just trying to limit their tax exposure. Does it make sense?
Very well.
Yeah. Everybody's trying to limit their tax exposure. Number next is poor governance. Poor governance in the sense that citizens do not get direct reward for paying their taxes. While we may argue that taxes are not expected to have a direct benefit, we do not expect that tax will have the direct benefit. Notwithstanding, we expect that when people pay taxes, the road that leads to their office should be good at least. Although I live in a place where our road is good, every road is right. We enjoy 247 lights. I will not criticize any government because I may also find myself in government later. So everything we are doing is fine, Abby. But on a more serious note, if we are paying taxes, we should see reward. I have seen people who try as much as possible to evade their taxes just because they just feel that government is not fulfilling their part of the social contract, right? And to be honest, especially if you are from Ogun State, you are living in the other side of Nigeria, anywhere you are, if you're entering Ogun State like this, you don't need signboard. The road will tell you that you're welcome to Ogun State. There's no need for welcome to Ogun State. That one is a long thing. The signboard will tell you the road is there. The road is a signpost that you are welcome to Ogun State. So, apart from others, you may argue that Mowe Road is good, but it's a federal road. But that's just on a lighter note. But again, there should be a benefit attached to paying taxes. Government should at least fulfill their part of the social contract. Number next is accelerated revenue generation program. So when you use consultants will always want to make sure that they take it because they understand the tax laws very well. So they always come up with one form of underpayment or the other. And this affects the level of information being disclosed to them by the taxpayer. So the tax consultant is always, well, especially when the tax consultant is paid on the basis of how much you're able to save, how much tax liability you're able to save. So the tax consultant become compromised at the end of the day and also take advantage of the tax loopholes. The last one is provision of tax laws. The tax laws are not very clear. Most of the time, you will see a lot of ambiguity here and there. And then we have to involve many people to interpret one set of law or the other. That in itself is also not good. So how do we solve the problem of tax law? Number one is government should provide social amenities, right? People should benefit from the taxes they are paying. We agree that subsidy is gone, but we've not seen the reward of subsidy is gone. Sorry, we've seen the reward of subsidy is gone. Number two is education of the taxpayers, all right? Taxpayers should understand the tax laws very well to know how to differentiate between evasion and avoidance to ensure that they don't fall victim. Sometimes people act out of ignorance, and then they get their fingers burnt at the end of the day. Then the three is the tax officials and amenities. Tax officials are doing very well. They are doing very well. Abby?
I agree.
Yeah. Yeah, they are doing very well. So they are doing very well.
What you're looking for this night will not give it
Eh?
to you.
What is it?
What you're looking for this night, nobody will give it to you.
It's APC member.
They were the
Setting
one,
the trap.
Wallahi, they were the
Nobody do
ones
it.
that voted APC. Now them.
Wait. What do you want me to say? That
He said the
Oh.
government is trying. No problem.
Yeah,
Yeah,
the
we are
government-
seeing the reward
Yes,
now.
now they are trying now. They are
Abi,
doing
oh.
well now. We agree now. They are doing well.
Petrol is over 800 naira per liter. It's okay now. We are seeing reward. No problem.
We have new tax.
Sorry, petrol is 950.
Renewed
So-
hope.
9 plus. It's reward now. The governors are they are living fat. No problem. We are seeing the reward. We are waiting for them.
Fortunately, we will win the next one. We will win the next election. But I don't know who will win anyway. But I know we will win the next election.
We are
Fortunately
not
for
winning
me.
any election. They've rigged
After
the election in
after 8
advance.
years, you will
Nobody is winning any election. They will win the election by
after
themselves.
8 years,
This we vote in the last
you
one.
continue. After 8 years, pass your lead and go.
Abi, but to be honest with you, our policies are working. Give or take. So we have for the first time in the last few years, we have balance of trade surplus. Yeah, you can check it. So people are now becoming dependent on Nigeria made goods. That's a plus for us. Abi?
That's on paper now. You see it. It's on paper.
Okay.
No problem. How much are they selling rice? All those
Is
one
the
are drama.
president and the people in the Aso Rock using made in Nigeria goods?
All those your GDP na grammar.
And if FIRS recruited almost 700 people in the last 1 year, they did a mass recruitment. And I think, to be honest, I think it was fair. And NNPC too did mass recruitment too. So I think we are getting, to be honest, I think we are getting there. Although are we there yet? No. Are we there yet? No. Are we there yet? No. To be honest, we are not there. But I think we are getting there. But whether or not all these policies will give us benefits is something I cannot really say for now. Number 4 is tax allowances. Most of our allowances are ridiculous. They are unachievable except when you want people to lie naturally. Imagine to say that you need 100 million naira capital base for you to be able to enjoy partner trust incentive. Right? So it means the partner trust incentive is not meant for ordinary Nigerians, because that's just the idea around it. So our allowances, our reliefs, our structures should be well defined. Number next is that there should be education of taxpayer. I think I've spoken about that. Then also there should be tax enumeration. Tax enumeration should be carried out so that we should be able to know. So for instance, now the new tax law has said that anybody whose account balance is more than 5 million, such account will be released to the tax authority, right, for proper scrutiny so that you can pay your proper taxes. And I think it's a step in the right direction. Your account balances should, at least we should move down that way. That way it will make more sense. Then the next one is legal drafting of the tax provisions. A well-drafted tax law should be free from contradictions, right? When we are doing interpretation of tax laws, you will understand that better. But there are a lot of contradictions in the tax laws where we now have to now apply sentiment. Sometimes we use literal interpretation. Sometimes we just use some personal interpretation to interpret a general law. So that in itself is an issue that we need to discuss. Any questions so far?
Please, what is the number one? Can you please scroll up so that I get the number one?
Number one should be provision of social amenities.
Okay, thank you.
Welcome. So let's go to tax planning. Tax planning is what a taxpayer does, right, to take advantage of tax loopholes. That's what is tax planning. It's a conscious effort to take advantage of tax loopholes. Right? So you sit down, right, with the tax laws, and then ensure that all these are done in such a way that you take advantage of tax loopholes. So what are ways in which I can take advantage of tax loopholes? First is, the tax planning checklist. Number one is list of approved taxes and levies due to the federal, state, and local governments. Yeah. Angelo Lua.
I wanted to ask, what's now the difference between tax avoidance and tax planning?
So
Or
tax
is
planning
it
is what you do to achieve tax avoidance.
okay? Thank you,
You
sir.
understand? You're welcome.
William.
Yes, sir.
Yeah.
Come and take the touch into his email.
So what are tax planning checklists? Number one is you have a list of approved taxes and levies due to federal, state, and local governments. You study them, right? And then you deliberately do things around that, right? Number two is timing of fixed asset acquisition. Sometimes you may want to acquire things, assets towards the end of the year so that you can claim full year annual allowance on the assets. That may be what you want to do. Number three is timing of fixed asset disposals in view of balancing adjustment. You may want to dispose assets at a time where you would have balancing allowance instead of balancing charge. Then timing of capital allowances claim and amount to claim. So for instance, you do not claim initial allowance is claimed once in the lifetime of an asset, and you may not be able to carry it forward. So you may want to claim your initial allowance first before every other kind of stuffs, right? Before any other kind of allowance that you have. Number five is hire of assets as alternative to outright. When you hire assets, right, the rent is allowable expenses. What that does is that it reduces your tax liability at the end of the day. So you want to choose to hire under hire purchase where interest is interest on the hire purchase arrangement is going to be allowable. Then you will still get capital allowance on the hire purchase assets. So that way you'll be taking advantage of two things at the same time: interest deductible and annual allowance and allowances on the hire purchase asset. Number five is where to invest. You may want to invest in you may want to invest in fixed in government bonds and treasury bills rather than investing in fixed deposits, because investment in FG bond is investment in FG bond is non-taxable. The tax exempt item. For interest on fixed deposits is taxable. So if you want to choose government bond compared to fixed deposit, especially at the time where there's no significant difference between the interest income that you get from the two of them. Number five is making specific instead of general provisions, pay properly deducted, withholding tax deducted, knowing the dates for remittances, knowing when to claim rollover reliefs, consider tax incentives before investments in a particular sector, and so on and so forth. Do you have any questions so far?
Question, sir.
Yeah, please go ahead.
Number 6. Yes, number 6. Can we go there? We said we prefer to hire equipment instead of buying. I believe that when you buy equipment, rather your expenses will increase, but you will also have opportunity to increase the value of your PP, where you can also use it to claim and fix. I think with the state, federal government, Ministry of Finance and Commerce, to increase the value of your assets, like a claim certificate for it for capital allowance purpose. So when you're now saying that higher is more preferable, gets me confused. Thank you.
No, I was only saying that you may choose to, okay, so let's look at hire purchase arrangement, for instance. For hire purchase arrangement, for the asset that you said, for the asset example that you said now, you claim allowances only for the lifetime of the asset. So say, for instance, you have a building, for instance, you bought a building, you can only claim allowance for 10 years on that building. But if you rent the assets, for as long as you still remain in the building, you continue to claim. Then the rent on that asset is tax deductible, meaning it's allowable. So that gives you a kind of incentive into perpetuity compared to your asset that is timed. That's one of the considerations, especially when you are a multinational corporation and you have a likelihood of exiting the contract at any point in time. Do you understand what I'm saying? So I'm coming from that perspective. Your perspective is correct.
Thank you, sir.
Yeah. Does it clarify, Daniel?
Very well, sir.
All right.
Very well.
I'm not saying that you should not advise them to not continue to you should advise your people that they should not buy assets again. They should keep renting. That's not what I'm saying. I'm only saying that if you want to look at it holistically, you may choose the best option, depending.
I understand. The 10 years will elapse and the equipment will still be with you, and then you cannot claim. But if it's higher, you continue. I understand your perspective, sir.
Yeah. Yes. Thank you. All right. So those are the examples that we talked about. For instance, withholding tax, deduct withholding tax properly, capital gain tax, immediately dispose an asset, quickly use the process to buy another asset immediately so that you can enjoy rollover relief for capital gain tax. Right? You may want to study the industry very well before investing, so that you invest in pioneer companies. You may want to invest in frank investment income, like for instance, you buy shares in other companies, your dividend income only suffers withholding tax. Withholding tax is the final tax on that kind of investment, right? Also, interest income on your domiciliary accounts is not taxable. So you may want to say that instead of me keeping money in my Naira account where I'll be paying taxes, let me keep my money in a domiciliary account. So those are still tax planning checklists that you want to consider. Do you have any question? All right. Other tax avoidance and tax planning issues. So number one is thing capitalization. This thing capitalization is always done by multinationals. It's a multinational thing, eh? What they do is this. They will prefer to fund their subsidiary through debt rather than equity. They're still on providing finance, right? But they will invest in subsidiaries by way of debt rather than equity, knowing fully well that interest is tax deductible. So they try as much as possible to ensure that they finance subsidiaries through debt. Although now Finance Act 2019 has made it a little bit. Can you hear me?
Yes.
Yes, sir.
I can hear me.
Yes, sir. We can hear you, sir.
Finance Act 2019 has made it a little bit more difficult for them, because now they are saying that your interest on loan must not be more than 30% of EBITDA. Right? Interest on loan must not be more than 30% of EBITDA. So your allowable loan must not be more than 30%, right? Then back-to-back loans. Back-to-back loans is always done by also multinational anyway. So what they do is that they create a, how do I put it now? The way that it will work. So back-to-back facilities, right, is when you get loan from a foreign company, right? Then you place it with a company. Does it make sense?
No, please come again, sir.
No, please let
You
me
get, so you get loan. Say, for instance, I am let me use 3 companies, for instance, to make it make sense. I borrow you money, right? Then I come to borrow money from you again. Does it make sense?
No.
Does it make sense? Does it make sense to you?
No.
Multinational, let
It
me
means that you are
okay, let me explain it this way.
and the lendee.
Let me explain it.
Okay.
Let me explain it this way. I have $10 million, right? Then I approach First Bank and say, it's multinational that did this rubbish. They did this rubbish very well. Then I approach First Bank and say, First Bank, take this 10 million naira in dollars and give me 5 million naira. Right? So that way, because I'm placing the money in the domiciliary account, interest on that money doesn't make interest on that account will not suffer tax. Meanwhile, me getting loan from First Bank, still like I'm getting my money back from First Bank. The interest on loan becomes tax deductible. Does it make sense?
No.
Okay. Let me
Yes.
put it this way. I don't want to cite. I don't want to cite. Let me use another hypothetical example that you understand. So there's Nestle Nigeria and there's Nestle UK. Abi? Does it make sense? So
Yes.
Nestle Nigeria has 10 million naira. So they are 10 million, let's say $10 million. They will give the $10 million to Nestle UK. Then Nestle UK will not give them an equivalent in another currency and borrow them. Do you understand how that works?
Yes.
So that is back to back.
Yes.
In reality, you are lending yourself the money. Does it make
Like
sense?
subsidy
It
for that
happens.
money.
It happens a lot. It is a very good occurrence in the financial services. I've seen it happen in the financial services. So you will see me placing money with a bank and then going to the same bank to get some money in another currency. So the money I get, and it's always happening in the case they use it for 2 things. The original intention may not be to reduce tax. The original intention is always for hedging. It's always for hedging, basically, especially in the case of volatility of FX. So when I have dollar, instead of me to keep transacting in dollar, I will keep the dollar in a bank, right, and then get a naira loan, so that at least that way I get interest in USD. So the original intention may not be that I'm reducing I want to reduce my tax. But again, if you look at it, if you place money in a domiciliary account, the interest on it is not tax deductible, right? And meanwhile, the interest on loan you get from that bank is tax deductible, meaning that it is Again, let me repeat myself. If I place money in a domiciliary account, it is a non-tax. The interest on that amount is non-taxable income, right? Meanwhile, the loan I get from that bank, the interest on loan from the bank is an allowable expenses. Do you understand the double enjoyment that way?
So in that regard, what it means is that
hello,
for
are you getting it?
Yes, sir. Okay, that what I'm saying is that hello, sir.
Yes.
Okay, what I'm saying is that so in that regard, the money, the interest on the domiciliary account will not be taxable, and the interest on loan
yes
here in Nigeria too, maybe in the bank too, will not be taxable too. Will not be taxed too.
I didn't get the second part.
What I'm saying is that so the interest on loan, that you now collected will not suffer tax.
No, it is an allowable expenses, mean that it is going to reduce your total profit.
Okay.
So that way, you are enjoying two things. I'm not teaching you to do bad things. It's not me that teach you this one. No. It's not me. It's not me that teach you. But that's yeah, Jay. Please go ahead, Jay.
Okay, sir. This back-to-back loan, I just want to understand. Wait, if I say back-to-back loan is when you get loan from a foreign company in Naira and you lend money to that same company in their own currency, is that back-to-back loan?
That's the back-to-back. That's back-to-back.
Okay.
Yeah.
Who is not enjoying the loan?
Who is enjoying? As how?
If a foreign company gave me a loan, I still gave them back. That means the foreign company that is enjoying the loan facility. Or are we
No,
just
in a
discussing
way,
the tax?
it is a way of hedging. It's a way of hedging. So, for instance, most sectors in the financial services do this thing a lot. So what they do basically is that somebody is trying to hedge, especially in Nigeria where there's volatility of FX. I can't get dollar and start giving dollar, flaunting dollar for transaction. I'd rather place the dollar in a bank. Right? And then get a loan in Naira for me to be able to finance my working capital. Do you understand? So the original intention is not to reduce tax. The original intention may be to avoid to hedge against FX volatility when the an operator is willing to take on that risk. But again, the tax just come by and then they try to suffer. They are going to bear the brunt in the whole hedging process. That's just what I'm trying to talk about. Do you understand what I'm talking about?
Yes, sir.
Mr. Michael,
Yes.
please, I just want to get you clearer. You said that the interest on the domiciliary account will not be taxed. Can you explain it better, please?
The interest on loan is interest on DOM accounts. Yeah.
Yes.
Interest on DOM accounts is a non-taxable income. Because the government is trying to ensure that everybody opens a DOM account. Yeah, FX reserve and things like that.
Is it because it's a foreign currency?
Yes, it's because it's foreign currency. Your interest on this is taxable, but foreign currency with an approved financial institution is not taxable.
That is, if you receive from the foreign currency. What if you buy from them and you are their rep? You'll be taxed now. You are supposed to remit now.
Is it through BDC or is it through an approved channel? I didn't get that question.
That is, he said if you get
yes
FX from abroad, you will not be taxed. But if I now buy if I'm a rep here and I buy from them, I was told I'm supposed to be tax, agency tax. That's what I'm trying to say. Let me just come out clear. I'm supposed to be tax, agency tax, and remit to FIRS.
Agency tax is different from. I didn't get what you mean by agency tax. Can you please explain? Maybe I can get what you're saying.
Okay, I'm just trying to give a scenario here. I'm making reference to collecting funding from in foreign currency, right? And then now the issue I'm bringing to this is that where you are a rep here for a foreign currency, a foreign company, and they normally give you goods you sell. There is this part of the tax that says under agency law that you're supposed to remit withholding tax of that amount back to
Okay,
the FIRS.
yes, I get. No, I get that point. So what is being subjected to tax is not the interest on the JOM account that you have. We are paying a tax as a personal representative based on remind me the name now, based on significant economic presence that you have in Nigeria. So it's a different thing entirely. What you're talking about is significant economic presence of personal representative. Do you understand? So now what we are saying, so I think both of us are saying two different things. What I'm talking about is the amount itself. If it is placed in a DOM account, not as a personal representative, but say for instance, I have a company, right? And I have a DOM account, and I place money with a financial institution, and the DOM account gets an interest, or I receive money from abroad, and the money generates an interest. Such interest on that amount is non-taxable. But what you're talking about is you being a personal representative, and you have a significant economic presence in Nigeria, right? And then that's a threshold of 25 million. You trade of over 25 million in a year of assessment. Then you're supposed to be paying tax in Nigeria. Even without that, on the goods or services you sell, you're expected to pay withholding tax on those kind of commodities, spending the time that you pay your final tax at the end of the day. So I think both of us are saying two different things. Does it clarify?
Very well, sir. Very well. Thank you.
Yeah. Dixon.
We wanted to get clarification, but I think you've cleared the hair to a certain extent. But I want to find out, you were saying something like it could be for other reasons. Could it also be for security reasons? Could the FX placement be for security reasons? For security?
What is it?
Whatever. Could the FX placements?
Yes.
You said it could also be for other reasons aside tax. So I'm asking, could the FX placement be for the reasons of as a form of collateral for the
yes.
The loan, the Naira loan?
Yeah, just to serve as personal guarantee.
Yeah,
that could be the reason, just to serve as guarantee most of the time. So for instance, some banks will, although the CBN has stopped it last year, memory serves me right, but before last year, what banks will tell you is that for you to have a particular working capital loan from them, your account, both DOM and Naira, must be domiciled with them.
Okay.
And you don't have any choice than to just make it domicile with them. So that is also that could also be a reason. But last year, I think April last year, CBN stopped banks, commercial banks now, from taking DOM as a like FX as a collateral for Naira loans.
Okay.
But I'm aware some guys still do it in the financial services. You know, when I mean by some guys, not banks now, but you know, financial services is broad. Like your asset managers, they are not CBN regulated. So I think they still do something like that.
Asset
manager does it.
Okay. Now the FX placement in question.
Is it me? I don't want to mention names, but you mention their names, so they do it.
Prof, Prof, the source of the FS placement, is it also,
I didn't
does
get
it
you.
actually matter? The source of the FS placement, does it actually matter? Be it maybe direct inflows or perhaps something you go to the black market, convert naira
I
to
think
dollar, pay it to your dollar.
Can you please speak up a little bit?
Okay, can you hear me now?
Yes, a bit.
Okay, what I'm saying is that the FS placement, the source of the FS placement is regardless, Abi, in terms of enjoying this non-deductibility or something
You
like
have to
that.
get it through the appropriate channel. No, it has to be
It
through the
must,
appropriate channel.
so it must be an FDI.
Yes, it has to be. Yes. It has to be through the appropriate channel because again, it has to be through. In fact, the law was very clear in saying that it has to be through appropriate channel because sometimes if you don't make it through appropriate channel, it could be that people are just trying to, that will further weaken our currency because demand for dollar will be high, while demand for naira becomes lower, and that also poses a problem on the macro. You get what I'm talking about?
Yeah, thank you. Yeah, I was trying to get that fact clear so that
Even if you can hear me, please tell me you can hear me.
we can hear you clearly and loud.
Yeah. All right. So another issue we want to look at is, thank you, is tax haven. Tax haven are countries that do not have a lot more tax compared to other countries. So you will see some companies that will deliberately go to those kind of countries like Netherlands, right? And then prefer to have operations there, right? You have Netherlands, I think about few of them, and Ireland should do something like that so that they can attract more people. So you can even see some Nigerians or some people, don't let me use Nigerians, some Africans, some people who are in a tax hostile environment. Instead of investing in that region, they will go to a tax haven to also take advantage of the tax loopholes. So what will make us say a place is a tax haven? There are three things. Number one is there's no tax paid at all, or minimum tax is paid. That's minimal tax is paid, or there are types of privileges for foreign direct investment. All right, so examples are Switzerland, Cayman Island, Mauritius, Singapore, Bermuda, Taiwan, Hong Kong, etc. Now, for the last, I think this should be the last one on this topic. You can always read the other ones on your own. Right. The last one should be foreign direct investment. So governments try as much as possible to use tax as a way of ensuring that multinational corporations invest in a particular region. So you see them investing in this particular area, a particular sector, or a particular region to ensure that, okay, can you hear me?
Yes.
Can you hear me, please?
Yes, we can. Yes, sir, we can hear you.
To ensure that, what I'm saying is that government try as much as possible to attract FDI. Last year, you will see that our president went to, Maersk came to Nigeria, and our president promised them a lot of things. And you see a lot of people applauding that event. Maersk, you know Maersk now, and some other guys like that, multinational. So those are things in which they can do. So sometimes you want to give them, they obviously want to invest in cost intensive, capital intensive sectors. And so you give them tax holiday, low tax rates, accelerated capital allowance, investment tax credit, joint venture, production sharing and joint venture for oil and gas. and some other things like that. So another way in which we can also have tax planning. So that is basically it about all of this. Do we have any question for me? So let me quickly look at this treaty shopping. Treaty shopping was tested 2 diets ago or 3 diets ago, something like that. So let me quickly look at it. So there are, for a treaty shopping, there are three countries in place. So we are looking at a third-party country, a source country, and the home country. Right? We're looking at the home country, source country, and the third-party country. So for treaty shopping, a person in one country earns income from another country and then invest that money from the source country in another country so that he can take advantage of tax treaty between the source country and the third country. Does it make sense?
Yes, sir.
Right. So this will always occur because the home country does not have a tax treaty with the source countries. So that's the way in which you can try to reduce that. So any other, do you have any question for me? So with this viewpoint of mine, I think I've been able to convince and not confuse you about tax avoidance and evasion. Yeah, please go ahead.
Please, can you come again with what you just discussed? The treaty shopping.
So treaty shopping, yeah, is
Sorry,
when
to add to the treaty
somebody
shopping, I want to ask, is it like somebody in Nigeria, any income in Ghana, and then investing it in Egypt, something like that?
Yeah, that's treaty shopping. Because Ghana and Nigeria does not have a treaty agreement, but Ghana and Egypt has a treaty agreement. So he prefers to invest from Ghana to Egypt. Do you understand? Because if repatriating that money back to Nigeria will suffer tax in Nigeria. So he prefers to take the money from Ghana, instead of taking back to Nigeria, takes it to Egypt. That's treaty shopping.
Because you understand that there's no tax issues or tax holidays in those areas, Abi, in Egypt.
No, because you understand that it's going to get more incentive in investing in Egypt compared to bringing the money back to Nigeria.
Okay.
All right. You get the gist there.
Yes, I get it. Thank you. Mr.
Right.
Michael. Mr. Michael. Please.
Yes.
I just want, this one is only, it's not related to this treaty shopping, but I just need a clarification. If I work in UK and I am saving my money in Nigeria, maybe in one of the financial institutions in Nigeria, will it suffer tax? Will they tax me in UK and Nigeria government will not tax me?
Depends on if you are converting the money to Naira or not too.
If I don't convert it to Naira.
So if you place it in the financial institution in Nigeria and you bring it through appropriate channel, it's not going to be taxed in Nigeria. But of course, you pay your personal income tax on the likes in UK.
Okay.
Thank you. But such money will not be taxed in Nigeria.
I think it's to also understand whether it's personal employment income or whether it's business income. So those are other considerations to consider.
Yeah, I would imagine it's an employment income.
Exactly.
Yeah, that's the answer I gave.
Thank you.
So you will pay your normal taxes outside Nigeria, but in Nigeria, if you do not convert it to Naira, because if you convert it, ideally, such money will only suffer withholding tax What I mean, I said withholding tax. We only suffer. Remind me now. Yeah, withholding tax, not withholding tax on interest.
Interest.
Yeah, we only
Bank
suffer.
charges. Bank charges. Bank charges.
Well, yeah, those kind of things. We will suffer all those charges in the hand of the bank. But if we not convert it to naira, then it is assumed that such monies are diaspora remittance and it will not suffer any tax. All right. Do you have any other question before we call it a night?
Hello, sir.
Hello, sir.
Yes.
Hello. Please, I want to ask if the note you sent has the new tax reform. Is it incorporated into the note?
I have not.
Like maybe is it updated?
No, I've not done that. I'll do that.
All right. Thank
I've
you.
not incorporated because the reason is that I do not expect, like I said, I explained at the beginning of the class that I do not expect the tax law to change in Nigeria today. Like as of now, I do expect the tax law to affect what's the name now? I do not expect the Reform Act to affect what I'm doing this diet, but it becomes applicable in January.
Okay, the reason why I asked was because I noticed some of the points you explained earlier and some of the tax reform that were newly signed. But since you stated now that it will take effect in January, but would ICAN not test it in November direct?
No, they will not test it. If the examiner is not a
Okay.
woman, I expect. Sorry, my mouth.
Hello.
So if the examiner does not if the examiner does not expect you to do this beforehand, right, then it will not be tested. Trust me, it will not be tested.
Thank you.
You're welcome.
Okay, Mr. Michael.
Yes, sir.
What I want to ask is, this our tax planning checklist. I saw where he stated that hotel income exempted from tax credit. So I want to ask, what type of income? Hotel income.
So it is basic. It is the food items there.
Okay.
The food items.
Okay. So
because they are considered basic of life.
Okay.
Yeah. All right. Any other question before we go? All right. Good night, everybody. Enjoy the rest of the night.
Nice, sir.
Yeah.
Nice, sir.
Thank you.
Bye.